Hello and welcome to Business Arena. I'm your host, Marie Casey. Let's go to the latest business headlines of the day. Gasprom Bank, the last of Russia's major banks with access to international banking, may soon find itself outside of it. The US government wants to cut off the bank's access to the SWIFT payment system by the end of November. Miraculously, the bank has so far remained outside the scope of most Western sanctions, which allowed it to convert rubles to euros and dollars, an ability which even the Russian central bank lost some time ago. It also allowed Gasprom Bank to muster big foreign currency reserves and serve as an intermediary in the Russian gold trade, as well as in Russian imports. Since 2023, Gasprom Bank has had problems with dollar payments, but the bank can still receive euros. The Polish government wants to extend the maximum price of electricity for the upcoming year. This mechanism aims to protect consumers from high electricity prices. The set price will be lower than the confirmed tariff levels. Additionally, the government has also opted to suspend capacity fee payments for households for 2025. Electricity providers will also have to submit updated tariffs for the second half of 2025 for approval. Energy has been one of the key factors fueling inflation in Poland. The EU's drive for a net zero economy is fueling debate among member states over its impact on competitiveness. With a new carbon emissions payment system set to begin in 2027, coal-reliant Poland aims to challenge the plan.
First, the Prime Minister.
I long debated whether to say it directly, but I will. Certain assumptions regarding CO2 emissions are undermining the European economy.
Now, the ministry in charge of EU funds is raising concerns about the impact of the EU's ambitious decarbonisation efforts.
The EU discussion of ETS2 changes is a priority for our presidency, which begins in just over a month. EU countries must address the critical question: is our policy's aim to impose new fees or to enhance the competitiveness of Polish and European companies?
The Emissions Trading System, or ETS, is the European Union's key tool for reducing carbon dioxide emissions. The basic rule is that if you emit carbon dioxide, you have to pay for it. The scheme has been online for over a decade now, but so far it's only applied to electricity generation and big heating networks. But major changes are on the horizon. By 2027, the system will expand to include emissions from individual households that rely on gas or coal for heating, as well as transport. For Poland, where 3 million households still use coal-fired stoves for heating, the financial impact could be devastating. Analysts predict that heating costs could rise by as much as 40 to 50%. Businesses will face higher fuel prices, with diesel rising by 12 euro cents a litre. This is why the Polish government is calling for a 10-year price corridor to ease the transition for those dependent on high-polluting heating systems. Under this plan, prices would start lower and increase gradually, giving households time to upgrade their coal and gas-fired heating systems to cleaner alternatives.
And on the bottom line today, we want to focus on European energy issues, which remain contentious in the current challenging geopolitical times, and also at the possible delayed implementation of the ETS2 legislation in the EU. This is all coming up right after the news, including the upcoming story about Austria. Gazprom stopped supplying gas to Austria over the weekend, a decision stemming from a financial dispute. However, this doesn't mean that Russian gas will stop reaching Austria entirely.
The dispute between Russian Gazprom and Austrian OMV energy company dates back to 2022. The arbitration conducted by the International Chamber of Commerce led to a decision ordering Gazprom to pay €230 million to the OMV. As the Russians have not paid the sum, the Austrians have stopped paying for the gas, leading to Gazprom turning off the tap. However, according to Martin Vladimirov, an energy expert, as other European countries were looking to diversify its supply, Austria remains reluctant to do so.
The agreement that OMV have has struck with Russian companies over the years have pointed out that there are enablers within the Austrian political and business elite that have made sure that these arrangements are kept and they are asymmetric. They provide preferential treatment to Gazprom and Russian entities.
On paper, Vienna wants to end Russian gas imports by 2027. This would be accomplished by importing fuel from other countries and increasing the production of biomethane and green hydrogen. The crucial part of the plan is reducing consumption by 30% by 2030. Despite the suspension, Austria may be able to continue buying Russian gas.
So OMV might not get the volumes directly from Gazprom under the long-term contract, but they can get it indirectly from third parties. Buy basically the same volumes from the gas exchange.
The Austrian government says it can get through the winter without any additional supplies of Russian gas.
And that's all for our business news updates today. For more business stories, check out tvpworld.com.